and then share again. I think that's how it works. Can everyone see my screen all right? Okay, cool. So hello, everyone. Welcome to the first general meeting for the Economics Club for the spring semester. Before we get started, I just would like to apologize for all the confusion surrounding this meeting. Student life, I don't know what's going on there. So I put in all the paperwork and I followed all their ridiculous rules and they still didn't get back to me. So I'm currently in the process of writing an email to the Dean of Students and hopefully getting this sorted out so that this doesn't happen in the future, because I was having problems last semester, I'm having problems this semester, and this shouldn't be this hard. So yes, again, apologies, but we are still on Zoom, so I guess that's a good thing. Today we have a lot of more housekeeping things to address. And so I'm going to go through those, and then I also have a presentation to give, but it's kind of a shorter one than some of the ones we've done last semester, just because I think that the rest of this stuff is going to take a while. So we're going to talk about the stock market game. We have elections coming up, so I'm going to explain how that's going to work. The MBA conference, then we want to put out a updated availability survey, and talk about some of the events we want to do this semester. Then I'll give my presentation on inflation, and then we'll play Kahoot. Hey, Wendy. So yeah, let's get started. So the stock market game, this is going to be pretty much the same as the stock market game took place last semester. If you are not familiar, we used a service called WealthBase, and we played a 10-week game. And so we had 26 people play, I think. So that was pretty good. Oh, we just lost someone. Oh, well. We had 26 people play, so we're trying to get that number up this semester. Currently, it's scheduled to begin Tuesday, February 8th. And last Student Life still doesn't give me my money, and then we'll have to modify some things. So yeah, so Tuesday, February 8th, it will begin, and then it will go 10 weeks and end April 19th. So the same as, same period of time as it did last semester. We're going to still use WealthBase. The prizes and the prize positions will stay the same. So we want to do prizes for the top 6 winners, 50 for first, 40 for second, 30 for third, and so on. One thing that we're going to do a little bit different this semester, though, is that we're also going to break the game into quarters, and then we are going to award a $10 prize for the quarter winner. So the way this is going to work is that when the game starts, everyone starts off with $100,000 to invest. And so whoever has the highest overall return for the first quarter is going to be in first place. So that's going to be pretty easy to see. But after that quarter resets, then we go into your relative starting position and what return you generate based off where you started. So the goal of this is that even if you had a really bad start, even if you're in the last place, you could still potentially be the quarter winner because you have the highest quarter return. Maybe not overall return, but you could still, win a prize. So that's the philosophy behind that. So we're going to be keeping track of that on a spreadsheet and we will update people on that periodically. So that's going to be an additional 4 prizes. So another $40. So more money, hopefully more players and more interest. I have a QR code to sign up for the stock market game. I'm also going to be sending out a recap email after this, and send the link in there. I've also been reaching out to some of my business professors and asking them to post something on their Brightspace pages. Dr. McGrath, would you be willing to do that? Okay, awesome. I have to type it all up, but we're limited to 50 seats. That's all our budget allows. So it's going to be first come, first serve. You people in the Econ Club are the first to know about it. So make sure you sign up as soon as possible so that you guys can play. Does anyone still need the QR code? No? All right. Well, if you missed it, or if you're watching the recording or whatnot, you can, I was sending out an email, so watch out for that. Elections. So the plan for elections is that, okay, so elections, we have 5 officer positions in total. President, vice president, treasurer, marketing director, and secretary. 4 of the 5 officers are graduating in the spring. So we are going to have a leadership vacuum. And so we need, people to step up and run for positions so that the Econ Club can continue far into the future. So the current plan is that elections will be held at our second general meeting of the semester. Currently, that is scheduled to be February 23rd. I am going to send out an updated, or not updated, but a new availability form. I sent one out at the end of last semester, but there wasn't a lot of people who filled it out. So yeah, I'm going to be sending out an updated one because there is 1, 2, 3, 4, 5, 6 people in here, and Paul McGrath, while we're very glad that he's here, is not a student, so and not eligible for an officer position. So maybe something needs to change with the timing of the meetings. Now we want to have the elections early in the semester because that gives us 2 general meetings to onboard the new officers and get them up to speed and figure out, what they're doing. Yes, Gabrielle, what's up?
I just wanted to mention that right now the finance and accounting club's going on. So I left early, but April's in there, and I know that there's a couple other people in there that I mentioned the club to that they wanted to be in it.
Okay.
So maybe next time we can make sure they're not overlapping.
Yes. Yeah. Yes, we planned the meeting date, and then the finance and accounting club sent out their email. I was like, all right, but yeah, it's a good point, but I wanted to get the semester off. We got to get some housekeeping out of the way before the stock market game starts and stuff like that. So yes, I agree. So I don't know if any of you are new. I don't know who remembers how elections worked last year. Does anyone remember how that worked? Oh, Jake, obviously you were there. So we're switching up the procedure a little bit from last year. There's now going to be a registration form. Let me just show you the registration form. The things on the registration form are your name, your email. We want your expected graduation just because, I don't know, maybe you forgot that you're graduating too soon, or you're graduating in the in the fall semester, and you won't be here for the full year. And then your major and minors, just a short bio about you, what position you're running for, and then why you're interested in the position. Let me show you guys the form real quick. This is what I came up with for the form. So this will also be in the email that I send out, the recap. If you are interested, you need to have this form filled out prior to the next meeting. The way we're going to hold elections is that for the people who, the people who want to run are going to submit this form, and then the people who are at the meeting, I don't know, we might do like kind of like a stump speech, like a campaign pitch. We'll see. And then, but we're gonna open the voting on that day, and it will be done online through one of these forums, and we'll keep it open for a couple days, and then we'll close it and we'll put out the results. And then at our next meeting, we can start the transition. We can, the goal is to bring the new officers into the officer meetings and get them all up to speed, so that when the current officers all leave, you guys won't be, drowning. So, does anyone have any questions about elections? And if you don't have any questions right now, you can talk to me later. Yes, Jake, you unmuted yourself.
Yes, question more so for the benefit of the group in the recording. Say if a person's interested in more than one position, like they're not set on a specific one, is there like an option for that, or how would you recommend to proceed with that if more than one piques your interest?
Yeah, so that's gonna, I can probably put a field where you could put other positions you're interested in. I don't know what the electorate field is going to be, sort of like, I don't know how many people are interested. We might have, last year I think everyone won unanimously because there was like 5 people in the meeting, and it was just the new officers. So yes, I will put a field in there, but we'll have to see how many people register. Because like if there's lots of people who want to be officers all of a sudden, like I don't know if we can do the run for multiple positions. And then what if you win multiple positions? You know what I'm saying?
I get you. Yeah.
Yeah, we'll figure it out. We have a month to figure out how exactly everything's going to run. So yeah, if you have any more questions or you're interested, I'm going to hang around a little bit after the meeting, and we can talk about it. Moving on, the MBA conference. So this is a kind of general business conference that happens annually. Last year was virtual. This year they're doing virtual and in person. One of their sections is business economics, and it's in downtown Chicago. So I'm submitting a paper to this conference, and then I know Frida and Wendy are also submitting a paper to this conference. It takes place on March 23rd to 25th. And so one of the things I was thinking is that members could also go if they were interested. I'm going to go regardless of whether or not my paper gets accepted. I know a couple of other members have also expressed an interest in going. If there was more of you on today, I'd have a better idea, because I wanted to get a gauge of how many people might want to come to this. But yeah, 3 people, 4 people I know are gonna go for sure right now. So I might send out an email or something about this. August, Gabrielle, are you guys maybe interested? Okay, Gabrielle, maybe. August, you there? No, apparently not. All right. So yes, this I think is going to kind of fill in for the field trips that we wanted to do this year. With COVID, it's been hard to find places that will take large groups of students. So one of the places we wanted to go was the Federal Reserve, the Money Museum there. They're closed indefinitely, apparently, and also they don't respond to emails. And then another place was SIBO, just one of the markets run out of Chicago, and they have a virtual field trip, but I don't understand quite the appeal of that. So, I mean, it's something we could look into if people were dying to go see SIBO, but I think this might be a more interesting and more worthwhile event to go to instead. So I will probably send out an email gauging interest, because we have to, apparently I have to submit budget requests several months in advance in order for Student Life to get anything done. So yes. All right, moving on. This is the availability survey. This is the updated one. So again, there's not very many of you here today. So the efficacy of having this QR code is maybe diminished, but I will send out this in the email. Hopefully we get a few more respondents this time around, because we want to have meetings when people can come to it. So, and maybe your availability has changed since you filled this out in the fall. So yes.
Excuse me.
Yeah, what's up?
We just click like which day is best for us, or should we click all the days that we could make it?
You should click the days that you are able and willing to come.
Okay, so like all the ones I'm able. Okay, thank you.
Yeah. If you're like available but you're not going to show up, then don't mark that day. Yeah. Because that's not helpful. Yeah. If you're if you're available, but you're not going to show up, it doesn't help us get the maximum amount of people at our meetings. So all right, moving on. So this is just a tentative semester calendar. We're going to publish something that's nicer to look at, maybe some nice calendar in the coming future. So February 8th, that's next Tuesday, the stock market games begins. Last year we did a kind of event right before that where we explained the stock market game. I think what I'm going to do this year is I'm just going to post a link to that. And then if lots of people are reaching out to me and they're saying like, I'm having trouble registering for the game or getting into the game, I might do like a Q&A session where I sit on Zoom and help people get in the game. But right now, that's not happening yet. February 23rd is our general meeting number 2. Okay, February 23rd, tentatively, provided that we don't get updated results from the availability survey. That's our general meeting number 2. It's also when elections will start. Elections will last, we don't know for sure yet. We're thinking probably 3 to 7 days, depending. So after that's all done, we will put the results out. And so we'll know the next officers by the third meeting, which will happen March 28th. March 23rd through 25th is the MBA conference. So if people are interested in that, we'll talk about how that's all going to work. Because we have to talk about like transportation, there's a registration fee and all that stuff. So yes. So meeting number 3 is going to be March 28th. Our final meeting of the semester is going to be April 13th. April 19th, which is a week later, the stock market game ends. And then some other things that we're going to do this semester that we don't quite have dates for yet is we want to have some guest speakers. So we were reaching out to some of those people and getting some of those lined up. We're going to do a movie night again, like we did last semester. That will be towards the end of April, middle to end of April. And then last year we did an awards ceremony, and we'd like to do that again. And that's where we'll do kind of member awards, and we'll do stock market game awards, and we'll do like a mini inauguration for the new officers and all that good stuff. So that will be at the end of this at the end of the semester. So late April. Any questions about the calendar? Cool, I must have done a great job explaining everything. All right, so now I'm going to give kind of an abbreviated, boy, what time is it? Okay. Yeah, now I'm going to give kind of an abbreviated presentation on inflation. I selected this topic because it's pretty relevant in today's economy. Lots of people are talking about it. And so I just wanted to kind of explore the basics of it and kind of the broad sense, what does it mean? What does it mean for us? What does it mean for the overall economy? So without further ado, what is inflation? So inflation is the decline in the purchasing power of a currency over time. So as the value of currency falls, the cost of goods and services rises. So we have this nice little graphic here, and it shows, how inflation has increased the price of a cup of coffee over time. So, back when Dr. McGrath was a college student, prices were, or maybe they weren't cheaper in real terms, but they looked relatively cheaper. So over time, inflation makes that number rise and the cost goes up. So, so in 1970, coffee cost $1.25. 2019, coffee costs $1.59. I don't know where they're buying coffee, but that seems too low, doesn't it? I don't know. I don't drink coffee. But so the opposite of inflation is deflation, which is where the purchasing power increases and the prices of goods and services fall. So how do we measure inflation? And so the easiest answer is price indexes, which is price index as a basket of goods and services, usually a weighted average, and they're tracked across time. And so you look at how the index changes, and that determines your inflation. So the most common index is the consumer price index. And this takes the weighted average of a basket of goods and services that are regularly purchased by consumers. So this is transportation, food, healthcare, things that people often buy. So when the retail prices change, then the CPI changes according to the weights assigned to each good or service. And then, so the CPI is one of the the factors that play into determining the cost of living. So the BLS puts out the CPI, I think every month. They have monthly data, so I'm assuming it's every month. And so you can use the CPI to track inflation across that. There's also the producer price index, which is similar to the consumer price index, but it's from the perspective of the seller. So it looks at how the prices of kind of intermediate goods changes in the economy throughout time, because that's the cost that sellers pay to create their finished goods. So the formula for measuring inflation through the CPI is you take the final CPI, you divide by the initial CPI, and you times it by 100. So in December, this should say 2020, excuse me, because this is the year-over-year inflation. In December 2020, the CPI was 260.474, and last December it was 278.802. So we plug this into our formula up here, and we get an inflation rate 107.4. So this means that $1 in December 2019 now has the same buying power as this should be $1.07 in December 2020. So this is 7% inflation, and I don't know if you guys are following economic news, but this is the largest 12-month increase since June 1982. There was lots of inflation in the 70s and 80s for a whole host of reasons, but yeah, hasn't been this bad in 40 years. So yeah. So the causes of inflation, the number one cause of inflation, well, I mean, the primary cause of inflation is an increase in the money supply. So this could be by monetary authorities printing and distributing cash to individuals. So, last year and the year before, we had the stimulus checks. So it increases the money supply, people spend more, inflation. Countries can also legally devalue their currency. So if they are trying to export more, they would devalue their currency and make their goods more attractive relatively with international trade and balance of payments and whatnot. And then another way that the money supply can increase is the Fed can kind of loan new money into existence by through commercial banks, and they buy securities. This increases bank balance sheets, and then they make more loans, and that increases the money supply. The two primary causes or types of inflation. So there's demand pull inflation, and this is caused when the supply of money increases demand faster than production capacity. And so that's the kind of the demand side, the consumer side of inflation. There's also cost push inflation, and that happens when intermediate good prices rise. So what happens is it becomes more expensive to make finished goods, and then the businesses then turn around and they impose those higher prices onto the customer, and so the prices go up. Another cause of cost push inflation is supply chain shocks. So currently, right now, we have a mixture of everything. We have more money supply. We have the demand pull pull inflation, and then we're having all sorts of supply chain issues. So it's kind of like the perfect storm of inflation. So is inflation good or bad? And this kind of depends on who you are. Yeah, there's not really a good or bad answer. It depends on who you are and how fast the inflation is occurring. So your tangible assets, so like property, real estate, commodities, these things tend to increase in value during inflation. So if you own those, that might be a good thing for you. However, if you're trying to buy those things, maybe not such a good thing. Your currency denominated assets, so cash, bonds, assets of that nature, those lose real value during inflation. So if you're a saver, the value of your savings decreases, the purchasing power decreases. If you're a borrower, inflation kind of erodes your real debt, because you might owe, say $1,000 on your car, but inflation is 7%, and so the value of that $1,000 when you made the loan was $1,000, but now it's relatively less. So that might be a good thing for you. Though if your wages aren't increasing, it might not actually matter. It might balance out. So it kind of depends on more than just, it's more than just a good or bad answer. For businesses, inflation is typically a bad thing. You want price stability because it kind of lets you plan for the future. If you're uncertain about the economic conditions, you might not hire new employees or make investments. So that might be kind of to the detriment of business. It's generally accepted that low to moderate inflation is an okay thing. It's definitely preferable to deflation. And so the target that economists generally put out is around 2%, 2% inflation. Now you might be wondering, why is inflation preferable to deflation? And the reason for that is because during deflation, your purchasing power is actually increasing. So if you have $1 and you knew that tomorrow the dollar was going to be worth more, you wouldn't want to spend the dollar today. And if you're not spending the dollar today, if everyone's holding on to their money, that hurts the economy. Businesses aren't making money. And so that actually kind of leads to this kind of like a stagnant economy. So this happened like in Japan in the 90s. They had stagflation, or not stagflation, it's something else entirely. They had deflation, and so kind of their economy was not in a very good place because people weren't willing to spend their money because it was increasing in value. Now, inflation is better, but to a point. If inflation increases more than 50% in a month, we call this hyperinflation, and that's not good news ever, really, because money becomes worthless, and then there's like bank runs, and yeah, it's just not a good time. Some recent examples of hyperinflation. The one I can think of is Venezuela. They're not doing, I don't know how it is right now, but I remember last year or maybe the year before, it was not so good down there. So maybe also Turkey is going through some high inflation, but I don't know if it's hyperinflation. So yes. So what's happening today? Inflation is 7%. As I said, is the highest since 1982, the highest in 40 years. There's kind of some disagreement about the future of inflation. Some people think that the inflation is more transitory, and they think that it'll kind of ease off when the pandemic ends and business returns to normal. Other people are less optimistic, and they're pointing fingers at the massive stimulus bills that we passed last year and the year before. So the jury's still out on inflation. We'll see what happens. One of the things I think earlier this week, or maybe it was last week, the Fed met, and they're expected to raise interest rates this year. And this may help curb the inflation because money becomes quote unquote more expensive. It's harder for businesses to get loans and for individuals to get loans. And so this kind of cools the economy off. Now, will they raise interest rates? We'll see. We're still in a pandemic, so it's uncertain. So yeah, that's my my short introduction to inflation. Does anyone have any questions? Oh, I must have killed it. I should teach a course. No questions.
Tyler,
Yes.
and anyone who's interested, on the Financial Times today, there is a article about worldwide inflation, and I saw it earlier today. Now I can't find it. It's kind of neat. They essentially have a map of the globe, and you can click on any particular country you want, and it'll tell you what the rate of inflation was in the month of December. It's an odd looking map. It is scaled by a country's population, if you've ever seen maps in that way. So instead of being the typical one, of course, so India and China are massive, of course,
Yeah.
and we're pretty big. And then Canada, it looks like it's disappeared, but it's pretty interesting. And as you mentioned about high inflation, yeah, Turkey is in the 30% range right now, which wouldn't be hyper, but it is uncomfortable. The Sudan is over 300%. But then there's others that are quite low. China is still in the ones or twos.
Yeah, but China manipulates its currency.
Yes, they do.
And they also lie.
Oh, now they
Also, they're a developing country according to their economic development team. So they're an innocent developing country. That's all they are.
Okay.
Yes, and I do remember the inflation in 1980, 81, and 82.
So would you be willing to tell us what that was like, or do you have anything to talk about that?
I couldn't get a job. It was very difficult. We had so the 70s was the period when OPEC first, as I like to say, flexed its muscles. OPEC was around for a long time, but it was really only in 73 was the first oil embargo, and then again in 78, 79. And so we just weren't prepared. We weren't very flexible. There were not alternative energy sources. And so it hit manufacturing just brutally. I do recall some. I mean, I tell students, and many will not believe me, that we rationed gas in the United States. And you could only, at least in where I grew up in Illinois, you could only buy gasoline every other day based on the last digit of your license plate. And people will not believe that happened here in the United States. So yeah, it was pretty bad. And so towards the end of that decade, President Carter brought in a chair of the Fed named Paul Volcker and gave him the job. fix this. And then Ronald Reagan replaced President Carter very quickly, kept Volcker on board, and given the kind of the dual mandate of low unemployment and low inflation, they had to pick one or the other. And this was a period of time, you brought up the term stagflation.
Mhm.
That's when you have both high inflation and high unemployment at the same time. And so we were dealing with almost double digit both inflation and unemployment. So I know going through the Great Recession was bad. I know the COVID year was bad, but never had we had double digit inflation and unemployment at the same time. And so the Fed just slammed on the brakes and unemployment shot up. And a few years later, we had inflation back down to where it belonged.
Yeah, I heard that Volcker was wildly unpopular
Oh,
during
yeah.
his term.
Well, yep.
Yeah.
But he came back he was brought back during the Great Recession, just as kind of a consultant,
Mhm.
the financial crisis.
Yeah.
I mean, you're in a position where if you fix one problem, the other one's going to get worse. You just have
Yes.
to pick your poison.
Yeah. No,
Yeah.
I've read a little bit about him. I think he did his job. So
Yeah.
I'm trying to think of how that would go now. Like I think with social media and whatnot, we have a lot more access to like our public figures, and I'm trying to envision how that would go down in today's society if someone
Be
picked
difficult. When near the end of President Obama's term and Chairperson Yellen came on board as chair of the Fed, the Fed actually started to make moves to raise interest rates because 2017, 2018, the economy was in really good shape.
Yeah.
Unemployment was even lower than it was now, and inflation was starting to show up, and the Fed started to bump interest rates up a little bit. And if you go to say any place and look up the federal funds rate, you'll see it start to step up. And then President Trump came into office, and at first they didn't get along very well, and there was a lot of pressure from Congress for the Fed to stop raising rates, but that's why you have an independent Fed. They probably would have kept going if it wasn't for March of 2020 and COVID.
Yeah. So do you think that the Fed should have raised rates sooner after the Great Recession?
No, I don't think so. It was the slowest recovery I've ever seen in my life.
Okay.
It just crawled along, just little at a time. You hear today about our low unemployment rate. I don't know if you're familiar with a better measure of labor force participation. It's terrible.
Yeah,
it's terrible. We should be at 67% of workers in the right age group should be either working or looking for work. We're at about 62. Now, it doesn't seem like much, but you multiply it by millions of people.
Yeah.
It's terrible. And that started in the Great Recession. That's not a COVID thing. There's a lot of people on the sidelines right now. But you're right. I mean, we cannot, 7% inflation is just unacceptable.
Yeah. Yeah, it's not going to work. So, well, thank you for your insight. Appreciate that. Any
Good hearing you.
other questions? Hi, April. Glad you can make it. The blank stare. Can she hear me?
I think they're busy eating pizza, so you literally started talking to them the second they were trying to start eating.
Yeah.
Yep.
That's fine. All right. Here are the sources I used for my presentation. We're now going to play Kahoot. And the winner of this Kahoot will get the regular $5 prize if I ever get my budget approved. All right. I'm still recording, right? Can someone check?
Yeah, you're good.
Okay. All righty. Classic mode. Can you guys hear the sound? No.
No
Hmm.
sound.
You guys want the Kahoot sound? And sharing options. Actually, I've got no idea how to share the sound. Wendy or August, are you guys still there?
I'm coming, good sir. I'm coming.
Okay.
Yeah, I'm working on it right now too. Sorry.
Nope, no problem. Just making sure. Oh, August, you got Elijah there too?
Yeah, Elijah's here as well. Yeah.
All right, cool. Okay, for the people who have teamed up though, I can only give the card to one of you. Or actually, no, I could split it. I could send you each a $2.50 gift card. I think I'll do that. There's nothing you can buy with $2.50.
You can buy a lot with $2.50, man.
Where are you shopping?
Walmart now.
Not with this 7% inflation, you can't.
Oh, that's true. That's true.
Can't even buy a normal pack of gum from the checkout aisle for $2.50.
Okay, I think we're all here.
I can buy 2 packs of ramen with that. That's enough food for a week, you know?
For a week.
I'm just joking. I'm just joking.
We got a food pantry. Okay. We're gonna get started. I didn't make this Kahoot. It was Farida. So if it's broken. Oh, wait, Farida, you can't play.
All right.
Okay. This can be defined as a general rise in the level of prices. Yes, it's inflation. Good job, everyone. You paid a basic amount of attention. All right, inflation is measured by this, and it keeps track of the changes in a fixed basket of goods and services. Who put real income? I didn't even talk about that. Or was that you, Frida? No. All right, never mind. I don't want to shame anyone.
It probably was me. I was having issues seeing the screen. So I
Oh,
just
okay.
picked something.
Is
The
there-
first two were just
Is
completely.
there something I can do on my end?
No, I think I'm just gonna have to drop out of this one. It just wasn't working on my phone. So I'm
Oh,
sorry.
okay. Okay, no worries.
But it probably was me. All right, but
Question number 3. This type of inflation occurs when total demand for goods rises faster than total output. Yes, so this is demand pull inflation because total demand is rising faster than output. If the cost of hamburger buns was increasing, and then and then burgers were more expensive in this little picture that was there. That might be an example of cost push inflation. Ooh, Jake. Which of the following is not a cause of inflation? Increase in the price of oil. Is it a
I'm
cause
having some
of
technical
inflation?
difficulties, man. I'm gonna have to drop out. Sorry, man.
Oh, okay. I'm sorry. Increase in the price of oil.
August, are you guys on the dorm Wi-Fi?
Yeah, man. It's just giving us problems.
Yeah, and dorm IT really sucks recently.
Yeah, it's been terrible the last couple weeks.
Yes. Okay. Increase in the price of oil. Is this a cause of inflation? There's a consequence of inflation. Hold up. I didn't make this Kahoot. Yes, but increase in unemployment is not a cause of inflation. Now, some of the steps that might be taken after that might cause inflation. If we're doing like expansionary monetary policy, or we're doing stimulus or liquidity injections, that might cause inflation. But the unemployment itself doesn't. If that makes sense. Did no one get points for this? What's going on?
No, we all got it wrong, so no one went up or
Oh,
down.
yeah.
Mhm.
Okay. I'll do it. What's the impact of inflation on businesses? Yes, all of the above. So, things get more expensive. Another thing that gets more expensive is labor. So, if everything's increasing in cost, workers want more compensation so that they can continue to buy things. So it becomes more expensive for the company to employ workers. The cost of raw materials increases. That's your cost push inflation. And then inflation makes the economic future uncertain. So yes, all of the above. Right? True or false? High inflation reduces an individual's purchasing power. Yep, that's true. Definition of inflation. True or false? Individuals save less if inflation is high. Yeah, so that's true, because if your purchasing power is being eroded, typically you don't want to keep your money in cash because it's just going to decrease in value. So you want to spend more, and therefore you're saving less. So that's the rationale behind that, how that works. All right. Ooh, Gabby and April. Want that 250 a piece? Yes, Jake.
Never mind, misclick. My bad.
Okay. What is the ideal amount of annual inflation to have in an economy? Yep, 2% is the generally accepted number. You don't want 0% inflation, because if something bad happens in the economy, then your inflation could slip negative, be deflation, and then there's a whole host of problems that come with deflation, which I talked about in the presentation, how people don't want to spend money because their money is increasing in value. When people don't spend money, then they're not buying anything, and businesses don't do well, GDP goes down, and yeah, it's just a whole slew of bad things. So yes, 2% is the target. What causes inflation? Yes, good job, all of the above. So the root cause of inflation is an increase in the money supply. This can cause increases in demand, and then changes in supply, changes in cost of intermediate goods. These kind of all ripple, bounce off each other, and then you get high inflation. What is the current inflation rate? Yep, 7%, highest in 40 years. So yeah, hopefully that comes down. Oh wait, this wasn't supposed to be a multi-select. There's only one answer, even though you can click multiple. What happens to the value of tangible assets during inflation? Value. Oh, no, this question just messed up. But everyone got it right. The value of tangible assets tends to increase during inflation. So think commodities, think oil, gold, other tangible assets. Real estate tends to go up during inflation. So yeah, it's actually that the assets increase, but fortunately everyone got the correct wrong answer. So I don't have to go figure out what people's scores should be. Yes, tangible assets tend to increase in inflationary periods. What happens to the value of the US dollar during inflation? Yes, it decreases. Your purchasing power decreases. So no, it does not stay the same. Can't even put a spin on that one. So yeah. All right. Jake pulls ahead. All right, and this is the final question. Currently, officer elections will be held on February 23rd. Yes, this is true. It will be held at our second meeting. Our second meeting is currently scheduled for February 23rd. Elections, this is, like I talked about it a little bit before, but this is very important. There we have 4 of our 5 officers will not be here next year. So we need new people to kind of continue the club. So yes, if you're interested, I'm going to be hanging out on the line a little bit right after this meeting, which we're about to finish up. Or you can shoot me an email. You have 23 days to figure out if this is something you might want to do. So, yeah. Frida, you made the PowerPoint. Or you made the game. Congratulations, Jake.
Tyler, since I'm an officer, I have no use. Can we give it to second place?
Yes, we can do that.
Yep.
Would you like $2.50 a piece or $5 for one of you?
You won fair and square, Jake.
It's all good.
It's bad form though, since I'm the one who helps make budget requests and all that jazz. So
If nobody wants this prize, technical difficulty person can take it.
No, me and April are gonna go to the Dollar Tree.
Okay, so
$8.
$2.50. Well, it's to Amazon, so you can't go to the Dollar Tree. Yeah.
Yeah. Give it to Gabby.
Okay. I will, if my budget is ever approved, I will send that money to you. It will come in a email to your spam folder, and I'll send you another email, not to your spam folder, to tell you to go check your spam folder. Sound good? All right, well, that concludes our meeting for the night. Thank you for coming. I again apologize for all the confusion. Like I said, I'm going to email the Dean of Students actually right now, right after this meeting, and complain and set up a meeting because I'm tired of this. If you have any questions, I'll be here for a little bit unless everyone leaves. If you're interested in, appreciate it.